M-Pesa, revolutionizing money movement. Imagine a world where your mobile phone becomes your bank, your wallet, and your lifeline to financial services. That's precisely what M-Pesa has accomplished since its launch in 2007 by Safaricom, Kenya's largest mobile network operator. M-Pesa, where M stands for mobile and Pesa is Swahili for money, is not just a mobile money service. It's a lifeline that has woven itself into the very fabric of Kenyan society and economy. The birth of a financial revolution. In a country where access to traditional banking was limited, especially in rural areas, M-Pesa emerged as a beacon of financial inclusion. Initially conceived as a way to simplify microfinance loan repayments, it quickly evolved into a full-fledged mobile money system. Users could deposit, withdraw, transfer money, and pay for goods and services with just a few taps on their mobile phones. The genius of M-Pesa lies in its simplicity and accessibility. All one needs is a mobile phone, not a smartphone, and a network signal. A deep dive into the numbers. Let's talk numbers, and they're genuinely staggering. As of 2021, M-Pesa boasts over 50 million active users across Africa, with Kenya being the epicenter of this success story. In Kenya alone, there are over 240,000 M-Pesa agents, making financial services accessible even in the most remote areas. This widespread adoption has catapulted Kenya to the forefront of the global mobile money movement, with over 70% of the adult population using M-Pesa. The impact on the economy? Profound. M-Pesa processes billions of dollars in transactions each year. To put it in perspective, in 2020, M-Pesa's transactions amounted to around 50% of Kenya's GDP. This level of integration into the economy underscores not just M-Pesa's success but its indispensability as a financial service. Changing lives one transaction at a time. Beyond the numbers, M-Pesa's real success lies in how it has changed lives. Small businesses use M-Pesa to manage their finances, pay suppliers, and receive payments. Families use it to share money across distances, ensuring their loved ones have what they need. During the COVID-19 pandemic, M-Pesa waived fees for small transactions, further embedding itself as a tool for resilience and survival for many Kenyans. A model for the world. M-Pesa's success has not gone unnoticed. It has become a model for mobile money services worldwide, from Afghanistan to Romania, showing that financial inclusion is achievable with the right mix of innovation and accessibility. M-Pesa's journey is a testament to the power of mobile technology in creating a more financially inclusive world. Kenya's economic journey post-2007. Following the tumultuous post-election crisis of 2007, Kenya embarked on a remarkable journey to cement its status as one of Africa's most dynamic economies. The government's strategic focus on macroeconomic stability, infrastructure development, and the encouragement of foreign investment played pivotal roles in this transformative phase. Macroeconomic stability and policy implementation. In the wake of 2007, the Kenyan government undertook rigorous measures to stabilize the economy. Implementing sound fiscal policies aimed at reducing inflation rates, managing public debt, and increasing domestic revenue collection were at the forefront of their economic agenda. These efforts contributed significantly to achieving a stable macroeconomic environment conducive to growth and investment. According to the World Bank, Kenya's GDP growth averaged approximately 5.7% annually from 2010 to 2019, reflecting the resilience and potential of the Kenyan economy. Infrastructure development, a catalyst for economic growth. Infrastructure development has been a cornerstone of Kenya's economic strategy. The government's commitment to improving road networks, energy supply, and information and communication technology (ICT) infrastructure has not only enhanced connectivity and accessibility but also served as a major attractor for foreign direct investment (FDI). One of the flagship projects is the Standard Gauge Railway (SGR), launched in 2017, connecting the port city of Mombasa with Nairobi and significantly reducing cargo transit times and costs. This project alone has had a substantial impact on Kenya's logistics and trade sectors. Diversification through agriculture, manufacturing, services, and technology. Kenya's economic diversification strategy has been instrumental in its growth. The agriculture sector, the backbone of the Kenyan economy, continues to be a significant contributor to GDP and foreign exchange earnings, with tea, coffee, and horticultural products being the main exports. The manufacturing sector, though still developing, has seen growth in agro-processing, textiles, and building materials driven by the government's Big Four agenda, which aims to enhance manufacturing's GDP contribution to 15% by 2022. The services sector, particularly tourism, has been a major economic driver, capitalizing on Kenya's diverse wildlife and scenic landscapes. However, it's the technological innovations in financial services, notably the mobile money transfer service M-Pesa, that have positioned Kenya as a leader in digital finance globally. M-Pesa's success has not only revolutionized financial inclusion but also spurred a plethora of FinTech innovations within the country. Challenges and outlook. Despite these achievements, Kenya faces challenges such as high levels of public debt, which, according to the International Monetary Fund, IMF, has risen significantly in recent years, and unemployment. Additionally, external factors like global economic downturns and fluctuations in commodity prices continue to pose risks to Kenya's economic outlook. Conclusion. Kenya's post-2007 economic journey is a testament to the country's resilience, strategic reforms, and diversification efforts. While challenges remain, the foundations laid for macroeconomic stability, infrastructure development, and sectoral diversification have set the stage for sustained growth. As Kenya continues to implement reforms and invest in key sectors, its trajectory towards becoming an upper-middle-income country by 2030, as envisioned in its Vision 2030 blueprint, remains optimistic. Kenya's economic expansion and diversification, a closer look with official data. Since 2007, Kenya has witnessed a period of robust economic expansion fueled by significant growth across various sectors such as agriculture, manufacturing, services, and technology. The government's commitment to economic and social reforms has played a critical role in enhancing the country's competitive edge, especially in the digital economy space, where mobile payment solutions and FinTech innovations have positioned Kenya as a leader on the continent. Agriculture and manufacturing, pillars of the economy. Agriculture remains a key pillar of Kenya's economy, contributing approximately 33% to the GDP and employing over 40% of the total population and about 70% of Kenya's rural people. Major exports include tea, coffee, cut flowers, and vegetables. The sector has seen growth thanks to government initiatives aimed at improving farm productivity and market access for smallholder farmers. The manufacturing sector, while still a small portion of the GDP at around 10%, has been identified as a crucial area for expansion under the government's Big Four agenda. The agenda aims to increase the manufacturing sector's contribution to GDP to 15% by 2022. Efforts to achieve this include investment in infrastructure, the development of special economic zones, and incentives for local and foreign investors. Technological innovations and financial inclusion. Kenya's global leadership in mobile money is exemplified by M-Pesa, launched in 2007. This mobile phone-based money transfer service has dramatically increased financial inclusion, bringing financial services to millions of Kenyans who previously lacked access to banking services. As of 2020, the Central Bank of Kenya reported that over 80% of adults now have access to financial services, a significant leap from 25% in 2006. Tourism, a vital source of foreign exchange. Tourism is another critical sector for Kenya's economy, contributing 8.8% to the GDP and providing employment to over 1.1 million people in 2019, according to the Kenya National Bureau of Statistics. Kenya's diverse wildlife and picturesque landscapes have made it a prime destination for safari and beach tourism. The government has invested in marketing and infrastructure development to boost this sector further. Social and economic reforms, enhancing quality of life. The Kenyan government has implemented various social and economic reforms to improve citizens' quality of life. Significant investments have been made in education and healthcare with the aim of achieving universal health coverage and increasing the literacy rate. The free primary education program launched in 2003 has seen considerable success, with primary school enrollment rates soaring. Furthermore, the government has expanded social safety nets, including cash transfers for the elderly, orphans, and the disabled to cushion the most vulnerable populations. For SMEs, which constitute the backbone of the Kenyan economy, the government has introduced several financing schemes to improve access to credit. The Micro and Small Enterprises Authority, MCA, was established to support SMEs' growth and development. Challenges and the path forward. Despite these strides, challenges such as public debt, which has risen to over 60% of GDP, unemployment, and income inequality, remain. Climate change also poses a significant threat to agricultural productivity and overall economic stability. In conclusion, Kenya's journey since 2007 showcases a country on the move with a government keen on leveraging economic diversification and social reforms to achieve sustainable growth. The focus on technology, agriculture, manufacturing, and tourism combined with investments in healthcare and education sets a solid foundation for Kenya's future development. However, addressing existing challenges will be crucial to maintaining this trajectory. International partnerships and investments. International collaborations and investments have been instrumental in propelling Kenya's economic development forward. Notably, China and Western countries have emerged as significant investors, particularly in infrastructure projects that are pivotal for Kenya's growth. One of the landmark projects facilitated by these international partnerships is the Standard Gauge Railway, SGR, inaugurated in 2017. The SGR, linking the port city of Mombasa to the capital Nairobi and eventually extending to the interior, represents a major leap in transportation infrastructure. Funded primarily by Chinese investments, the project cost approximately $3.8 billion for its first phase, showcasing China's commitment to Kenya's infrastructure development. The railway has significantly reduced cargo transit times from Mombasa to Nairobi, boosting trade and logistics efficiency. According to the Kenya Railways Corporation, the SGR has transported millions of passengers and tons of cargo, contributing substantially to the economy since its launch. Beyond infrastructure, international partnerships have extended to sectors like renewable energy, healthcare, and technology. For instance, the Lake Turkana Wind Power Project, the largest of its kind in Africa, has received funding from a consortium of European lenders. It underscores the diversification of Kenya's energy sources and its move towards sustainable energy solutions. Facing challenges, public debt, unemployment, and external shocks. Despite these advancements, Kenya has grappled with significant challenges. Public debt has soared, attributed largely to borrowing for infrastructure projects. As of 2021, Kenya's public debt stood at over 65% of GDP, raising concerns over sustainability. The International Monetary Fund, IMF, and World Bank have both highlighted the need for careful debt management to avoid distress. Unemployment remains a pressing issue, particularly among the youth. According to the Kenya National Bureau of Statistics, KNBS, the unemployment rate has fluctuated, with notable increases during economic downturns. The COVID-19 pandemic exacerbated this situation, leading to job losses and reduced economic activity across sectors. External factors, including global economic fluctuations and climate change, have also impacted Kenya's economy. The agriculture sector, vital for livelihoods and exports, has been particularly vulnerable to erratic weather patterns affecting productivity and food security. Conclusion: resilience and the path forward. In navigating these challenges, Kenya's resilience and adaptive capacity are commendable. The country's economic diversification strategy, leveraging sectors like technology, agriculture, and services coupled with social reforms and international collaborations, lays a foundation for sustainable growth. To maintain this trajectory, addressing the debt challenge through prudent fiscal management, enhancing job creation strategies, and fortifying resilience against external shocks are imperative. Continued investment in social services, infrastructure, and innovation will be crucial for Kenya's journey towards a prosperous and sustainable future. In summary, Kenya's post-2007 economic narrative is a testament to its potential and resilience amidst challenges. The strategic partnerships, investments, and reforms undertaken during this period highlight Kenya's commitment to growth and development, underscoring the importance of sustainability, inclusivity, and resilience in its economic policy framework.